Thank you, Victor. Good afternoon, ladies and gentlemen. I'm going to try to cover in 8 minutes 100 years of history. As a bank whose strategy is very much focused on the growth markets of Asia, Africa, and the Middle East, we see three fundamental trends which we believe will continue to affect future global investment opportunities. The first of these is the shift of global economic and financial power from west to east. Indeed, we believe that the world has embarked on a new supercycle. The world economy is twice the size it was a decade ago and is already above its pre-recession peak. And I'll comment further on that in a moment. The second trend is the emergence of new trade and investment corridors. And the third is that there will be significant opportunities embedded in this new global paradigm. The winners will be those economies with either cash, commodities, or creativity. In other words, the 3 C's. Let me start by elaborating on what I mean, though, by a continuing shift of economic power from west to east. We believe that the world economy is experiencing its third supercycle since the Industrial Revolution. And what I mean by a supercycle is that a period of historically high global growth, lasting a generation or more, which is driven by increasing trade, high rates of interest, urbanization, and technological innovation, and of course is characterized by the emergence of large new economies. The world has seen 2 such supercycles before. The first took place during the second half of the 19th century and lasted until the eve of the First World War. America was the big winner, moving from the 4th largest to the largest economy during that time. The second supercycle began with the end of the Second World War and lasted until the oil crisis in 1973. Japan and the Asian tigers saw the biggest gains over this time. Similar to the previous 2, this supercycle is driven by the industrialization and urbanization of large emerging markets, especially those in the East, such as China and India, supported by increasing trade and high rates of investment. The significance of this supercycle is that it has accelerated the shift of global economic and financial power from west to east, as symbolized by the transfer of global economic leadership from the G8 to the G20. Indeed, the US, EU, and Japan's share of world GDP has shrunk from 60% in 1980 to 47% in 2009. During the same period, the share of world GDP of developing Asia, Middle East, and Africa has more than doubled, going from 16% to 34%. The GDP of ASEAN 5, which of course comprises Indonesia, Malaysia, Philippines, Singapore, Thailand, and Vietnam, has grown by more than 200% over the past decade. Today, 4 of the top 10 largest banks by market capitalization are Chinese banks. We remain confident about the US economy in the longer term, but the US, like many other countries in the West, is currently facing the aftermath of a financial crisis and the consequences of deleveraging, rolling over debt repayments, and restructuring balance sheets. It will likely recover, but only slowly. So on the one hand, we have a buoyant East, and this is contrasted with a sluggish West. The creation of new trade corridors between emerging economies is also a driver of growth and investment opportunities. Between 1990 and 2010, trade between emerging economies, or the South-South trade, has more than doubled to reach 18% of world trade. China has already emerged as the single largest market for India, Brazil, and Japan. In addition, what used to be an export-led trade is now balanced by significant imports of commodities. And foreign direct investment is now balanced by overseas direct investment. In 2009, China ranked 5th in the overseas direct investment. There has not been as much comment on the emergence of new trade corridors between ASEAN 5 and Africa and Latin America, but this should not be underestimated. Trade in these corridors has grown by over 200% in the last decade. More diversified global trade and investment also gives rise to the need for a more diversified global monetary and financial system. One of the most significant developments in 2010 was the growth of the offshore renminbi market in Hong Kong. The desire across the world to hold Chinese currency is immense. The offshore market is indicative of a longer-term shift in global savings and investment, not just to China, but to the emerging world. Backed by the world's second largest economy and 30% of the world's FX reserves, the offshore renminbi market has all the potential to leverage on Hong Kong to liberalize and connect with the global financial system in coming years. The last decade could be characterized by the words, made in China. This next decade, it may be owned by China. And as we look even further ahead, perhaps we should have and paid in renminbi. So who were the winners in this new global paradigm? As I said earlier, it will be those countries that have one or more of the 3 C's: cash, commodities, or creativity. First, cash. China is a natural candidate, given its high savings rate and large FX reserves. Next, commodities. Africa has the potential to attract more inward investment, to take advantage of its abundant resources, and can also leverage off its young population and growing middle class. Similarly, the Middle East and Latin America will benefit from their young population and rich resources. They will offer many opportunities to investors. Investment in infrastructure will be vital to success, both in terms of hard infrastructure, like roads, rail, and air transport, and softer infrastructure of education and skills. Both will form the bedrock of rising levels of tertiary education, increased skills, rising numbers of patents, and the ability to move up the value curve. This links directly with the third of the 3 C's, which is creativity. Creativity and entrepreneurism are already important features of many successful Asian economies today, particularly among small and medium enterprises. Many Western countries, however, will need to raise the bar and continue to invest in education and skills training if they are to ensure that creativity and entrepreneurism remains key features in their economies. So, in conclusion, we have already embarked on an exciting era for emerging markets. There will be bumps along the way, but we believe this super cycle will be characterized by a high level of global growth, led by the East. And if I may, I'll conclude by using the words of Confucius, who reflected on wise leadership over 2,000 years ago. To rule with virtue is like the North Star in its place, around which all other stars revolve in homage. Thank you very much.